and for participation. He also leaves the stage. Thank you very much.
Ladies and gentlemen, without much further ado, since the gentlemen have bountifully expanded on issues around the Eurozone, I need to catch up, and so does my panel. So distinguished guests, ladies and gentlemen, both here in the Guild Hall as well as connected to us by live stream, welcome to our second session, The Euro, Yesterday, Today, Tomorrow. Now, barely a week ago, just across the street, Europe was in focus at the Riga Conference 2013. Though the conference focused on security issues and our NATO commitment, Europe's strength, stability, and sustainability were both highlighted and criticized, also in the context of the Eurozone, at quite a few sessions. Now, though our organizers certainly didn't plan for it, this discussion should illuminate some of the questions raised at last week's conference, and in simple terms, should respond to all you ever wanted to know about the Euro, but were afraid to ask. We have 4 very distinguished panelists, and I must say on behalf of the organizers, we're very grateful that they found the time to spend with us today. Now, we were supposedly to have 1 hour and 15 minutes. I fear we're kind of down to 1 hour and a few more minutes. Though each panelist's CV is rather extensive, you can look into them in the material you have from the conference when you came into the room. I will introduce each one quite succinctly and invite them to share their reflections on the topic for about 10 minutes and may be rude by stopping them at about the 12th minute. Thereafter, you, the audience, will have the floor for questions, including our live stream audience. I will get your questions, so please don't be shy and send them in. Now let me introduce our panelists in the order that they will speak, and that is right here from my immediate left. Mr. Yves Bertoncini, Director of Notre, Jacques Delors Institute in Paris. Professor Henrik Enderlein from the Hertie School of Governance in Berlin. Professor Lucrezia Reichlin from the London Business School, and Zoja Razmusa, Council Member of the Bank of Latvia. So we kick off with Yves Bertoncini. We kick off with Yves Bertoncini, a man steeped in policy making and advisory experience on many aspects of the Europe we know today. We welcome a prolific author of books, articles, and policy papers on European questions spanning political, economic, and social issues. Since April 2001, Mr. Bertoncini is director of Notre, a think tank dedicated to European unity, established by the 8th president of the European Commission, and as you heard earlier, probably looked upon as the father of the Euro, Jacques Delors, in 1996. At the Institute's research work, Bertoncini focuses in particular on questions of European policy and institutions, and on issues relating to democracy and mobility. It seems to me that he's the perfect person to give us insight into the context of where Europe and the Eurozone is today. Monsieur Bertoncini, the floor is yours. Just talk.
Thank you very much. Can you hear me? Yes? Very nice to be here with you today in such a historical moment. I'm a bit uneasy because normally it's ladies first, but this time it will be men's first, apparently. But I should say that I was happy to meet not only you, but also Milda, who will definitely be the star of the day, so lady will be higher than men anyway. What I wanted to say to introduce this panel on the past, present, and future of the European and Monetary Union is first to very quick remark on the past as introductory remark. Your minister just told us about the long history of monetary integration, the attempts that have been made to achieve such an integration, from the Werner report to the Jacques Delors report. Of course, this has been made for functional reasons, but we should not forget, that is the first point of the past, that it has been made, the euro has finally been established for diplomatic and political reasons, right before German reunification at the same time. It was for diplomatic reasons that the euro was established, political reasons, just as a symbol of further European integration, further European unity, not only for functional reasons, because it's better for a single market to have a single currency, but also for political reasons. And that's why today it is still a political reality as well as an economic reality, and that is why basically I suppose the euro is too political to fail, and it has not failed during the last crisis, will not fail in the future, and we'll be very happy as a community to have a new member in 2014, meaning Latvia. So having said this, if we look at the present with this in mind, a political reality as well as an economic one, I will develop 2 or 3 basic elements on the basis of, partly on the basis of the works produced by the Jacques Delors Institute, and more precisely on the basis of a group we had, a working group we had gathered, conducted by my neighbor, Henrik Enderlein. So he will probably tell you much more about the practical detail of this Tommaso Padoa-Schioppa working group. Tommaso Padoa-Schioppa was also a kind of founding father of the euro because he was a member of the Delors group and former president of Notre. So on the present first and the future afterwards, which is quite logical. What is the present situation, the context of the economic and monetary union? Well, the context has changed because or thanks to the crisis we have gone through. And what was at stake is a kind of solidarity control dialectic. Solidarity first, because even if it was not planned, and more than not planned, it was excluded, there were bailouts for countries in difficulties, Greece, Ireland, Portugal, Cyprus, and Spain for the banking sector. And in compensation of this action of solidarity, in compensation as well as of the action of the European Central Bank, which were very decisive, there was more control, kind of dialectic, more solidarity, then more control to reduce the risk of moral hazard. More control, it has been said, through different tools, the Memorandum of Understanding in the countries on the program, but also the 6-pack, the 2-pack, the reform of the Stability and Growth Pact, which were not perfect, but which were a pact of trust, and the pact has not been respected. Then more solidarity on the one hand, more control on the other hand. And it created a new situation today, politically speaking, as regards the relation between the European Union, the European Monetary Union, and its member states. And I think we need to be very, very clear on this because there is a confusion on what is the role of the European Union and what remains at the member states level, because the member states are sovereign, they can remain autonomous in many of their choices. And there is a confusion we need to clarify, not only for the present, but also to go further on more clear basis. The confusion is that there are countries on the program. So in this, we have a kind of IMF-style management of these countries that does not make the EU popular, by the way, but the IMF is not popular anywhere in the world. But this is temporary, and this is only in 4 to 5 countries, no more. This has to be said, because as for the rest, we are in different regimes. I called them, the second one, a kind of United Nations regimes, to refer to the Stability and Growth Pact reform, meaning the countries are perfectly free to act, provided they don't break certain rules, certain limits. The more famous is the 3% GDP deficit ceiling. But provided they are within the limits, they are totally autonomous, they are totally free. We have another regime I call the hyper-OECD regime, OECD being this organization set in Paris, producing many recommendations for structural reforms, but with no binding effect. So of course, the political pressure at the EU level is very strong, but even if it has been a bit increased with the last reforms, it should not be underestimated. Reforms have to be made, of course. It should be better if it was made by national governments, structural reforms, to make the economies less divergent, but there is no binding effect. And then the fourth regime we see emerging is a kind of what I call the World Bank regime. The World Bank regime would be a regime in which the EU, the center, would help the member states to implement reform, help them, including financially. But it's very important, I may elaborate a bit more on this further, but I won't do it now given the time frame, to distinguish these different regimes and then to clarify the confusion. Apart from this in the present, of course, we can still see economic weaknesses for the EMU. The EMU is not complete. There are still divergences of competitiveness, a kind of vulnerability to asymmetric shocks, and also a vulnerability to what we call self-fulfilling solvency crisis. I suppose Henrik will elaborate much more on this. What I wanted to say to finish on the present is that there are also social and political challenges ahead for the EMU. Social challenges, because of course the population within the EMU have seen the stick from Brussels, sometimes from Frankfurt. They'd like to see the carrots. It would be easier. So the interest of the capacity, financial capacity, which could be put in place to help implementing structural reform. But there is also a political challenge, because of course, as you all know, the EU is less popular than before. A popularity deficit, by the way, is not a democracy deficit. It's something different, but at least it is a popularity deficit. The relation between member states have become difficult, with sometimes stereotypes, lazy Greeks. Germans are, considered as if we were still in the past. But I would like to conclude this first part by underlining something more positive, which is that the democratic foundation of the EMU are probably more solid today. That's maybe a paradox, but today the people within the member states whose euro is a single currency have all voted yes to remain within this currency. They are more aware of the rights and duties linked to the membership of the single currency union. They know that there are disciplines to comply with. They know that sometimes they need to bail out their neighbors. They know that this is a common concern, but no people decided to go elsewhere, to exit the Eurozone, and even one people decided to join. So that is the ambivalent situation, an ambivalent political situation to face the future. Because of course, as regards the future, many things remain to be done to complete the economic and monetary union and to reinforce our unions, many unions. So I won't elaborate on the three classical building blocks which have been mentioned before, meaning completing the banking union and establishing a real fiscal union and a real economic union based on the euro area budget, for example. And why not a euro area debt agency? I will only focus on the political union aspects. Your minister have just said that it was maybe more difficult to achieve, less technical, more political. I would be tempted to contradict him by saying that the political union is already a reality. I will quote Jacques Delors again, that's part of the pleasure of my mission, when he said, "We are in a federation of nation states." Federation of nation states. We are already in a federation of nation states. Mario Draghi is the president of a federal institution. And on the other side, the nation state remained perfectly autonomous and sovereign for many fields, for example, education, social protection. So of course, on this basis, there are more convergences to organize. But we should not look at them as if it was something totally new, a revolution. There are different convergences, different unions to establish or to deepen. And for this, we will also need a kind of more institutional, a clearer institutional setup, a government of the Eurozone with a full-time president for the Eurogroup, for example, a Eurozone subcommittee in the European Parliament, an inter-parliamentary conference within at the national parliaments level, faces and means to act. To conclude in 2 words, again about the context, I would say that what helped the European and national authorities to go further during the crisis, and I would say thanks to the crisis, is the pressure of the financial markets. That was a driving force, the investors' pressure. And so a lot has been made under this pressure. And now we have the feeling that maybe the pressure is less important and that things could remain equal, stable. I would conclude by saying that there's another type of pressure which should be considered, which is the social pressure, because the social situation in Europe and in the Eurozone today is terrible, and the political pressure, because the image of the European construction has been deteriorated. And so my final wish to introduce this panel is to say that within the window of opportunity we will have after the German elections and before and in the perspective of the European election of next May, this political and social pressure will be considered, and that these further steps we need to implement for the European and Monetary Union will be implemented in the next few years. Thank you for your attention.
Merci, Monsieur Bertoncini. Now, all over the world, public opinion surveys indicate that there are diverse levels of concern, if not distrust, in the quality of governance of our financial institutions, including by governments. Our next speaker, Professor Enderlein, has focused his research on economic policy making, European money integration, fiscal federalism, financial markets, and financial crises. Today, Henrik Enderlein is professor at the Hertie School of Governance, where he's also a member of the founding faculty. The school is an international teaching and research center that prepares students for leadership positions in government, business, and civil society. The euro and its governance. What an issue. Professor Enderlein, the floor is yours.
Thank you very much, Madam Chairwoman. It's a great pleasure, honor to be here today. It actually reminds me of an event that took place almost exactly 12 years ago, 12 years minus 3 months. I was working at the ECB at that time, and it was the day, 2nd of January, the day after the introduction of the euro coins and banknotes in the euro area. I was in my office, and the president of the European Central Bank, Wim Duisenberg, walked into my room. He didn't do that every day. He did it that day. He walked all around the Euro Tower to thank the members of staff of the ECB for that historic event. So he walked into my office and said, "Oh, you're young, but you know what? The euro will die after you." And I thought this was a very nice way of putting it, but I must admit that in the past 2 years, I started to get seriously concerned about my own health. And so allow me to structure my speech using that medical metaphor to discuss first the symptoms and do a diagnosis of what has happened in the past 12 years, even 13, 14 of euro area integration in the rest of Europe, and then look for therapy and discuss with you or introduce this panel by saying what should be done in order to avoid the difficulties we've gone through in the past years. The point I wanted to start with is that there are a certain number of things which I think economists and political scientists alike got wrong when designing the euro. And it's very important for me in such a situation, such a context, not to talk around those mistakes, but to name them and to draw lessons from them. I think what we, researchers, observers, policymakers, got wrong in the beginning, and some of us were quite aware of this, was to overestimate the convergence effect that would be triggered by the single currency. For economists, the key idea was that the so-called real exchange rate effect, sometimes described also as competitiveness, so the price adjustment across the euro area countries would lead to more convergence. In fact, the opposite took place in the first years, the first decade of the euro area. The real interest rate effect was much stronger than this real exchange rate effect, so the ECB set one single interest rate for a very diverse set of euro area countries. And this single interest rate was too high for some countries, in particular Germany, by the way, in the beginning of the 2000s, and was too low for other countries, in particular Ireland, Spain, and others. Now, I sometimes say, ECB president has just left the room, so I can say it, one size fits none might be a better way of describing things than one size fits all. The ECB runs the right monetary policy for a country that does not exist. And now we have two options dealing with that. One is to say, this euro area project is not the right project. And I think that would be utterly wrong. The other option is to say, we want to make this thing work. And the question is, what do we have to do in order to complete the euro area rather than talking about its disintegration? I'm from Germany. You know that there are several voices in this country that have called in the past years and now are even campaigning in the election campaign on disintegration of the euro area. And I've always taken the floor and told my fellow countrymen and women, this is not the right way to go, because the euro has always been a political project. We must get the politics and the institutions right in order to make it live, because if we destroy the euro, and that's a very strong word by my chancellor, if we destroy the euro, then we put the European project as a whole at risk. So we don't have a real choice, and that is very important to be taken into account. So after this very quick description of what went wrong, let me focus on the therapy and see what we can do. I see challenges, or actually perspectives, in 4 areas. And what I will describe now derives from this report I coordinated in this Padova-Skjopa group with a number of very interesting co-researchers and policymakers. And we actually reflected on this and came to these 4 conclusions. Number 1 is we need to complete the internal market. The euro convergence process will only be completed if we have a true internal market. And that's a quite challenging project, because we know that national politicians very often want to protect certain areas, be it financial markets, be it banking, the service industries in general, social security, taxation. So if we are honest with this euro area project, we need to push the internal market project much more. And I think I start with this because this is one of the forgotten items in crisis management of the past 2 to 3 years. We've spoken about many things, but too little about the internal market. So that's point number 1. Point number 2, it will take time until this internal market is completed to the extent that we actually have this full price convergence through the real exchange rate in the euro area. So we will probably need some kind of readjustment, stabilizing mechanism in the euro area. There are various proposals out there. The French finance minister 2 days ago made a proposal on a common basic European unemployment insurance scheme. I've made a proposal that is not based on unemployment insurance, but on output gap differentials, because I think we need something like cyclical buffers, a cyclical shock insurance, to allow countries that grow too quickly to take steam out of the economy and to give countries that grow too slowly a bit of a possibility to enact a stimulus. And obviously, this is a problem which was forgotten in the early years. Ireland never breached the Stability and Growth Pact. Spain never breached the Stability and Growth Pact. So let's not forget that. It's not the sinners that broke the Stability and Growth Pact, except obviously for Greece and to some extent Italy, that got us only into this problem. It's actually a much wider set of economic challenges. So I think we need such cyclical shock insurances and a cyclical buffer system. Proposal number 3, we need some kind of solution for a democratically legitimate lender of last resort for fiscal crisis in the euro area. A lot of progress has been made in this field in the past 2 years, starting out with the EFSF, which first was supposed never to be activated and never to become permanent. Then it became permanent. Now it's even the ESM. What this institution or mechanism still lacks is first a good connection to democratic accountability. There is no direct parliamentary control. And second, it is not yet designed in a way that I think could overcome a massive, fundamental, renewed fiscal crisis in the euro area. Now, I'm not sure this crisis is going to come, but it's better to be equipped once such a crisis could pop up. We've made a proposal for a European monetary fund, a European debt agency, in which one simple rule would apply. If you don't play by the rules and debt levels get out of control, you must be ready to abandon your sovereignty as a sovereign nation in the euro area. It's interesting that President Draghi used the words, "we share sovereignty." I think he was too modest. We have already transferred sovereignty, and there should be more transfers of sovereignty, but only in exceptional times. Jacques Delors and I in a paper have called this federalism by exception. Become a federation in crisis times when things go wrong or when a country does not behave in the right way. But in normal times, if things go well, it's the national economic policies that should be applied. The fourth element, and I can be very short, is banking union. A lot of progress has been made, and I don't want to get into the nitty-gritty of a single resolution mechanism and the intricacies of the SSM, but I think after the German elections in October, November, December, early next year, there will have to be some kind of resolution fund agreement. I think it will be a network-based solution where countries will, to some extent, preserve a veto power. That is not the optimal solution, it's second best, but it will allow the ECB to do the asset quality review early next year and then relieve the European banking system from those strong doubts which are still out there. To conclude, we need those 4 pieces of medication so that Mr. Duisenberg's omen that the euro will live longer than I live doesn't lead to my life being very short. Thank you very much.
Thank you. Our next panelist is a person who seems to have a knack for looking into fiscal future and certainly participates in shaping it. She is an expert on forecasting, business cycle analysis, and monetary policy. You may not know that some of the methods she has developed are widely used in central banks around the world. Award-winning Lucrezia Reichlin is not only professor of economics at the London Business School, but has hands-on practical experience as non-executive director of the UniCredit Banking Group and a member of its risk committee since April 2009. She's also co-editor of the Journal of Applied Econometrics. No wonder, as Professor Reichlin has published numerous academic papers on econometrics and macroeconomics in so many illustrious publications that time forbids me to enumerate them all. For a peek into monetary policy, lessons learned, and challenges ahead, Professor Reichlin, the floor is yours.
Thanks a lot, and welcome to number 18. I'm really the lucky number, apparently. I'm really happy to be here in Latvia to celebrate this occasion. I used to be at the ECB as a director of research. Now I am out of the cage, so I'm allowed to be a little bit more critical than if I were representing that institution. And I brought few pictures, which maybe I will stand up because I don't want to So I will take a narrow, I mean, the previous speakers have done an excellent job to go into the general. So let me just share with you a few facts. This is the GDP growth for the euro area in the last 5 years, these very bad years. And we have the US and the euro area. I think it's quite natural as a big area, the second most important economy in the world, to compare ourselves with the US. And although the first crisis was global and we shared it with the US, there is something very important to reflect upon, that we had a second crisis that the US did not have, our second recession. And our second recession was partly due to our difficulties of dealing with crisis. So to me, to sort of an incomplete European architecture that hopefully will be progressively repaired. And I don't want to discourage you. In any case, you have joined now, so there is no way backward. So, but we came a long way. I mean, this is an index of financial stress, the spreads in money market rates, which actually give you an idea what kind of problems this relatively new institution, the European Central Bank, had to deal with. First with Lehman Brothers bankruptcy, and then with the sovereign crisis, which actually just preceded the second recession that I just mentioned. So I think it's important to reflect upon how did the ECB deal with it. I mean, after all, we are here talking about the monetary union, so the central bank, our common central bank, is a key institution. And so I want to make few remarks about that, so to take quite a narrow perspective. And then I hope that in the discussion we'll be able to elaborate on more general issues of the European architecture. So I think the ECB actually did an excellent job to deal with the first crisis. Before the European Monetary Union was formed, a lot of the critics were saying that we did not have the tools in place to deal with a generalized liquidity crisis, which is what we got after Lehman. And in fact, Tommaso Padoa-Schioppa, who was quoted by the person who spoke before me, had actually anticipated that, responding to the critics, that the European system was indeed robust, that we would have been able to deal with that crisis. And in fact, we were able to deal with that crisis. The ECB acted as an intermediary of last resort. So it's what Tommaso had called the market operation approach to the lender of last resort, providing liquidity to banks and basically preventing the melting down of the European financial system. As you can see, the tensions in financial markets decreased, and in 2009, we were kind of back to an almost normal situation. However, and here is the focus on my intervention, the problem was that while we were able to deal with liquidity problem, we did not tackle the solvency problems. And here I'm talking about the sovereigns, but especially I'm talking about banks. I know that in Latvia, to talk about banks is, I mean, you know about banking crisis, okay? So that not all countries of the euro area had banking crisis, but if you look at the aggregate of the euro area, and if you look at the bank capital to asset ratio, considering this abstraction that we are a whole economy, so the euro area is a whole economy, you can see that nothing happened in Europe. So that's the nothing happened in the UK, but nothing happened in Europe either. So the green and the blue lines are the UK, the red are the US. So while in the US, the authorities went for bank capitalization and aggressively recapitalized banks, nothing happened in Europe. And so while the ECB was dealing with liquidity, in fact, there were parts, important part of the European financial sectors, which were actually insolvent. And this insolvency was not dealt with, and we actually procrastinated and procrastinated and procrastinated. With the emergence also of solvency issues at the sovereign level, the story has been told several times. What happened is that we had a progressive Balkanization of our financial system. So basically, foreign banks went back home, And a financial system which was integrated at the level of the wholesale market and at the level of the sovereign debt market became segmented again. So we now have a common monetary policy, but we have a completely national financial system. Maybe this makes us safer, but it's very difficult to have monetary policy in such situations. So I would say that this is a very urgent problem to deal with. Now, this has actually repercussion for the real economy. And I think here I want to point to a second fact, that this is the liquidity that the ECB provided under Trichet and then after Draghi through this unlimited liquidity at fixed rate to banks against collateral. So this is where the famous long-term refinancing operation, which were sort of the bulk of the extraordinary measures that the ECB put in place after the crisis. So that's a lot of money given to the banking sector. But you see, look at the left-hand side chart, you see that loans actually went down in the first recession, but in line with real economic activity, in line with industrial production. In the second recession, actually loans went down much more if we consider the dynamic of industrial production. So what we witnessed was a real credit crunch, extreme weakness of loans, especially in the corporate sector, with, also is behind those numbers on the real economy that I showed you at the beginning. So a lot of liquidity, but not much on effect on the real economy. So I would say that the ECB was very successful in phase one, less so in phase two, and this is where we are now. So now I think it's interesting to look at what banks did. Again, I'm taking an aggregate perspective. So in both recessions, the pink areas are the recessions. Banks, just basically got filled up, with government bonds, but not only with government bonds, they got filled up with the government bonds of their own domestic. So it's actually what really is happening in the second recession is that banks, in their asset, they're fully loaded with government bonds of their own sovereigns. This, of course, creates a lot of correlation of risk between the banking sector and the sovereigns, which actually, this risk is now, is basically undistinguishable. So basically, the first lesson of this is that if you want to have an effective monetary policy for the real economy, you have to deal with banks. And this is partly the ECB job, but it's not only the ECB job to deal with banks. This is essentially a fiscal issue. So it's very important to go, as many people already said, towards the banking union. I think the asset quality review that we will have in the next months is key, to deblock this situation. But of course, there are lots of question marks. What if, nasty stuff is found in some of these countries? Do we have a backstop? Can we, find an agreement at the level of Europe which is democratically legitimate, which will be able, to shoulder, problems of, shortage of shortfalls of capitals. So I think this is actually, at this juncture, I think that this is risk number one in the euro area, the first, an important challenge. And I think that the basic lesson is that a central bank without other pieces of the European architecture, which have some fiscal connotation, it becomes, at the end, not very effective, in its main function. So I think that it is really important to go forward, and I hope that the next month will bring, good news. And we count on number 18 with your experience of banking crisis to help the euro area to, to go in this path, which no doubt will be, bumpy, but maybe at the end, before Henrik is dead, or after, we will be able to get there. Thanks a lot.
Thank you very much, Professor Reichlin. Now, though many have been involved in preparing Latvia to join the Eurozone, few have been as integral to Latvia's monetary progress as the next speaker, as she is kind of been involved for the past 20 years. Zoja Razmusa, council member of the Bank of Latvia, represents the bank on the Advisory Technical Committee of the European Systemic Risk Board. Previously, she was a representative of the Bank of Latvia on the Working Group on Public Finance of the Monetary Policy Committee and the Banking Supervision Committee of the European System of Central Banks. She started her career at the Bank of Latvia in 1993 as deputy head of the Monetary Policy Department and really participated in developing and advancing the functions of the bank. I'm sure she is as surprised as anybody else and as happy as anybody else that we are where we are today. So who better to share with us how Latvia will fit into the Eurozone picture as of January the 1st, 2014. The floor is yours, Ms. Razmusa.
Thank you very much for the kind words. To be a last speaker always is challenge, as I think many distinguished guests has already touched upon many policy and also institutional issues. But as me being from Latvia, it's very difficult to resist to show and prove that Latvian economy is flexible, as was mentioned here. Latvians overall are very critical to ourselves, and introducing Euro from January next year will be a further step of Latvian economy integration in the Euro area. And the difference between two is Latvia is a very small, open economy, experiencing fixed exchange rate for 20 years, while Euro area is much bigger, most integrated, and more closed. So I will look on both sides, changes from Latvian perspective and from Euro area. I will escape part of slides, but I think if you look on at these slides, and Latvians overall, especially export sector, really could be proud. Looking on the growth of the export, not only from the beginning of the 2000, but also in a crisis time, as if you compare 2008 and 2012, it's clear seen that first the diversification of export markets has increased, and also the Eurozone share has increased. We have been always using foreign currencies, and Euro already is part of our economy. If you look at currency structure on foreign trade, that Euro already dominate, and the another currency which will remain will be US dollars, and then others follow. But also, if you look on a product of exports, then you will see that also during the crisis changes happened, but overall diversification provides flexibility, and exporters gain new markets, not only in EU, but also outside in Middle Asia, in Japan and other markets. Also export of services are quite diversified, and transit cargoes always were significant for the country, but structural shifts also towards road transportation also are present, and as you could see, travelers nowadays come more and more often to visit us as well, and helping further diversify our revenue stream. All this was possible mostly due to the flexibility in the labor market. And as you see on the right-hand side, the wage productivity gap has been closed. And overall, we could say nowadays that there are no aligning macroeconomic imbalances, as both external and internal balance has been restored. And the future challenges mostly are of structural nature. In labor market, it's more job, more efficient job, quality of education, quality of labor force, as labor force is a main resource in any country, in particularly, I would say, in Latvia. And on product market, it continue efforts to innovate, to get more sophisticated expert products and also improve further business environment. Regarding changes in monetary policy framework, on one hand, as here was mentioned already, we have and still have a peg to euro from 2005. But on other hand, we will become a part of the European Monetary Union, and European Monetary Union is a very big area, and it, on a monetary policy framework, is quite different. In Latvia, I think if you look through, it's well known that we have a tightly fixed exchange rate, that the strategy the Bank of Latvia had chosen at the beginning, I could say, of independence or very close after. Main channel of monetary transmission is exchange rate. Main liquidity providing operations were and still are foreign exchange operations. And what is similar nowadays, it's, I could say, excess liquidity in the system, but the reasons are different. If you look on prospects or how the Eurozone works, then the main operations are market operations. The main channel of monetary policy is interest rate channel, and exchange rate is flexible, meaning the adjustments in economy mostly are going through the price and cost effects. Also, if we compare, you could say, current level of interest rates and monetary policy instruments, then, as was mentioned by our governor, the set of the instruments we use currently are already in line with the Eurozone instruments, but the level of interest rates and also reserve requirements for sure differs. What is different else is that European Central Bank respond to the crisis in several steps, and most of them were lowering interest rates or more accommodative monetary policy, introducing new longer-term refinancing operations to ensure efficiency of the transmission and also declining or diminishing the fragmentation in the market. These were and still are outright monetary transactions and securities market program. What we have to have in mind that all these measures, I mean non-standard operation and also eased collateral requirements, are for the extraordinary time, I would say for crisis time, but they are not forever. It means that low interest rate environment for sure will not be indefinitely, and I could say businesses and also economic units should be prepared that these times will not be forever, and meaning that those risks associated with a low interest rate environment should be taken into account in everyday decisions. From euro area policy, euro area itself is undergoing significant reforms. It builds new institutions and set new crisis management instruments. Before the crisis hit, many rules, also Stability and Growth Pact improved, was in place. But the problem was that implementation was not maybe sufficiently strong, allowing governments to postpone needed reforms. And as you could see, then structural budget balances only in some countries were close to the balance or in surplus. During the crisis, legal framework were changed, and both preventive and corrective actions, arms, have been strengthened. Many countries, those in program, already made substantial efforts to decrease the imbalances they have. But the fiscal space for many was very, very low due to the reason that savings in a pre-crisis time were overall inexistent. I think another important feature was perception that contagion within the EMU overall is not possible. Financial markets price sovereign risk before the crisis, maybe not sufficiently taking into account financial positions and debt levels of the governments. Nowadays, and with, I would say, built up imbalances, it's quite hard for the governments to take steps to improve existing situation. But I think what's important for the future to avoid such situation is that counter-cyclical fiscal policy is not only for the good times, for the bad times, but also for the good times. So, loose monetary policy and non-standard monetary policy measures probably will be withdrawn when economic conditions in euro area normalize. But for sure that these measures cannot replace the necessary structural reform and fiscal discipline. On the other hand, the changes in euro area fiscal and also financial framework, what many speakers have talked about, are permanent. And I would like to conclude with the survey results made in Latvia by Latvia's Fakti in 2011, which was a year rather hard after fiscal consolidation. But it proved that also many Latvians are not maybe united on views on introduction of euro. But if you look on a response of Latvian population served, what are the answers to the questions or statements that the government should not spend more than it earns, that the national debt and debt service burden should be reduced, and Latvia should actively collaborate with the partners and must show solidarity, because in the long run, it will be beneficial for all of us. Thank you.
Thank you very much. Now, patient listeners in the hall and on live stream, now is your opportunity to pose questions to the panelists. I understand that the Twitter feed is terribly silent, so you have 5 minutes to get on board, and if you have something to say, please ask now or forever hold your collective peace. Those of you that would like to ask a question here in the Guild Hall, we have 2 microphones on both sides in each of the aisles. Those of you that are up on the balcony need to come down because there are no microphones there. So is there anybody here in the hall who has a question to pose to our illustrious panelists? Please, sir, identify yourself. You need to go to the microphone because it needs to be translated. There's a microphone right here.
My name is Antonio Sainz de Vicuña. I'm Director General in the ECB, Legal Services. Now, those who live in Germany can see in the full electoral campaign posters throughout cities saying, "The euro spaltet Europa," the euro divides Europe. And there has been recently a very widely known book where it specifies with a lot of detail how indeed the euro has divided Europe. First of all, there was the big division, the ins and the outs. You were out, you will be in now. There was within Europe throughout the crisis, before the crisis, the big differences about the effect of the single interest rates in the different economies, the one-size-fits-all problem. And then in the crisis, the different reactions that have finally ended up with a full segmentation of the financial markets and the lack of a unified financial market, to the extent that one can say indeed that the euro exists as a unit of account, as a means of payment, but not properly operating as a common currency. And now what Europe is confronted is indeed with this division between those who benefit from the euro, those who do not benefit from the euro, and they are suffering all the measures for rebuilding, let's say, a growing economy.
So your question to the panel would
be? The panel is questioned, and in particular political scientists, so the left side of the panel, are asked whether or not they see that the support by the population to the euro can be corrected by the measures being adopted. If the answer is not yet, but perhaps when they succeed, it will, what is the democratic deficit has to do with the new measures, which technically speaking, I would say they are the correct measures that should be adopted. But there is a widening room between the bureaucratic sphere and the population in general, and this is my fear.
Now, we have 10 minutes left. It sounds like we're opening a brand new seminar, actually, with that question. Please, Yves.
Yes. Thank you for this question. I come back on what I have said very rapidly by trying to insist on the difference between a popularity deficit and a democracy deficit. This is key. I mean, we have said, all the observers said that the European Union, apart from the ECB, which did a very good job, but which is not an elected institution. I mean, the president is not elected, it's different. But as for the others, we all said that it was too little too late all the time, too little too late. So not only a popularity deficit at the end, but also, I would say, an effectiveness deficit. But why is that? Because precisely the issue, the challenge was to reconcile different views from the different people. So I think we should reconsider, for better or worse, the classical divide between the elite and the peoples as regards the European construction. This probably always exists in Latvia as in any other countries. But what we have seen in the last period is a new divide between peoples, the Greeks and the Germans, let's say it bluntly, but not only, but that is a major example. So this means that the choices made, sometimes imperfect, reflects the democratic differences between the people. My second point was to say again that no, the euro is a symbol of unity. When coming to this conference, I looked at my pockets and I saw that I had a German eagle in my pocket. I don't know where I took it, by the way. I did not visit Germany recently, so I'm sure that next year in Paris, in London, elsewhere, I will have Milda in my pocket, like this. You know, this is a symbol of unity. And this crisis has reinforced, maybe for material reason, you know, but the belonging to the monetary union. Believe me, in France or in any other countries I visited, people are not totally enthusiastic in saying, well, we should stay within the single currency. But they all say, we should stay within the single currency. In Germany, there is a party now, so Henrik will tell us more on this, Alternative for Deutschland. In the polls, it's 3 to 4%. Let's say they will have 8%, 6%. It's nothing in a democracy. 6, 8, 7% in favor of a German exit. So I think, of course, there are problems. I told about these problems, you know, this conflict between peoples, but at least we can say that the democratic foundations, against the appearances, the democratic foundations of the monetary union are probably stronger today than what they were 5 years ago.
Professor, it's very telling. We have here a Frenchman and a German telling us all about this as we enter as the 18th currency. Please, founding members.
Thank you. Well, it's exactly the difference between the founding members and the new members, which I think is important. Antonio Sainz de Vicuña has raised the core question that is going to face, perhaps to a lesser extent, Latvia or the others of the newly joining member states, but actually France, Germany, the Netherlands, Italy, perhaps Spain. And the issue is the following. In those countries, the introduction of the euro was considered as an endpoint in European integration. And I think this was wrong. The euro is nothing more than a starting point for integration. And I think the populations had to learn this. I participated when I was at the ECB in the European Convention as the observer of the ECB. And one of the first decisions the European Convention in 2002, 2003 took was to say, we don't open up economic and monetary issues because it's done, it's settled. Now, from today's perspective, there's a lot of irony to that statement, because everything was fixed then while the boat was already in the storm. You had to rebuild the boat. And it's natural, I think, that the populations had difficulties following that process. This was ad hoc decision-taking at 3 o'clock in the morning before Tokyo markets opened. This was rushed through Parliament. We almost had treaty changes overnight. So it's natural that the population in such a situation is puzzled. The same happened with the rescue packages after Lehman in the US and other countries. So it's not a specifically European issue. I think it's absolutely natural that now questions arise and people say, so, but what's now the future for democratic legitimacy? And this is the question we have to answer. And I think, therefore, instead of, I agree with Yves, instead of saying, oh, there is a Eurosceptic atmosphere out there, I think this is narrow, this is contained. People want the euro, people like the euro. You've just shown the charts on the polls in Latvia, which are impressive. 80% saying, this is the lowest figure, they want to be solidaristic with the other countries. So there is this nucleus which has to be built. But we have to deliver, political leaders have to deliver. We need to link the newly established rescue schemes more closely to the democratic accountability in the European Parliament. We need to take into account that the euro has redistributive implications, and redistribution requires, as political scientists say, input legitimacy, and not just an executive decision. So all this is now the second big wave, and we have to take it seriously. Otherwise, I think I would be concerned, but no, we will manage.
Professor Reichlin?
Yes, I just want to recall a little bit of economic history. Harold James wrote a very good book about the European construction and made the point that too many central bankers were involved, so that all this architecture was built having monetary policy in mind rather than a broader perspective. And I think that the risk now is that we are actually behind the curve, and the political instability that we are witnessing in Southern Europe in particular is actually telling us something. We had 5 years of recession, increasing unemployment, a lot of people permanently outside the labor force. The polls are not as nice as the Latvian polls. They used to be, not anymore. And so I want to remind you also from economic history that even the gold standard, which was a very straight jacket for monetary, for monetary arrangements, had clauses which allowed countries to exit temporarily if the countries have been faced with big external shocks, like wars, for example. We don't have any of such clauses, and the only answer to the big crisis that we have given is internal devaluation. Internal devaluation had huge cost for an important segment of the European population. This is incompatible with democracy. At some point, this will create problems, and is creating problems. So I don't think we should be complacent. I mean, it's not at all like a promenade, is going to be really bumpy unless, we take the problem, seriously.
Please.
First of all, I would like to be not misunderstood. I mean, the poll I show, it's a poll on questions or statements were asked. The poll on Euro introduction currently is lower, but my view is there are many reasons for that. First of all, I think divergence of views in our society overall is positive. It's one, I would say, sign of really democratic processes. If you remember, I would say previous centuries and decisions was unanimous and nobody overall publicly, doubted. But on other hand, developments in Latvia were really, on one hand, I could say tough and difficult if we take from the beginning of 90s, and very, very fast. And for sure, the costs of, rebuilding and restructuring economy, undoubtedly, is big ones. And that's why I would say on a bigger issues, if you ask population, we have many overall referendum in our very short history nowadays. And overall, they were positive, but for sure that people need time to learn, to understand, and I would say on other hand, if you look on developments, on deposits, for example, there is a clear trend already, and not short, to increase deposits in euro. There is, in difficult times, like it was in crisis time, there is no easy solution. And many people are looking on developments in Europe, just raising many issues, and I think they really are in place. But on my view, Europe itself, or European Monetary Union, is changing, and changing considerably. And I do believe that Latvia will be a member and a good partner for further development. Thank you.
Thank you. We have time for one more burning question that takes no more than 3 sentences. Is there anybody in the audience with a question? There are. Please, stand up, move very swiftly to the microphone.
It's as swift as I can.
This is good.
Morten Hansen, Stockholm School of Economics in Riga, mostly directed to Professor Enderlein. Just to say quickly that I'm very much in favor of the euro already, but given your story with Mr. Duesenberg, I'm even more in favor now, of course, right? Just to be on your side. But I was thinking about your proposals. I think they sound very good. I think you could easily sell them here in Latvia, but I was also all the time thinking about how do you want to enforce it? And I'd like to see your answer sort of in the context of the growth and stability SGP that was never very well enforced, as we have seen it. So how will you enforce or ensure enforcement of your proposals? Thanks.
And unfortunately, in 5 sentences or less.
Enforcement cannot be legal, enforcement has to be political. I think that's the single sentence I would like to say. The SGP has shown that if the political will is not there, then the legal rules do not work. And so I don't want to go into the single proposals I've mentioned, but I think what we need after this next election is a very clear determination by leaders in Europe that economic policies are a matter of common concern. That's written in the treaty. And so, therefore, we have to find the right rules to stick together. Now, let me pick out one point. This European Debt Agency or European Monetary Fund. You would have to enforce it through some kind of treaty change that makes it clear for the countries that they're ready to accept what derives from this European Debt Agency in times of crisis. Now, we're not going to send armies anywhere. We're not going to solve this in court. We can only do this if the populations know that by marrying themselves with the euro, they enter into a relationship which cannot be divorced. I learned when coming here, or I knew this, Latvia 20 years ago, almost exactly, got its own currency. And I think at 20, that's an ideal age to get married. But the only thing is, there is no way to divorce.
That's terrible, I'm divorced.
On these very friendly reflections, let me close with my own reflections on the panel. First of all, thank you very much. Paldies, danke, merci, dank u wel. all the way through. Secondly, quite a few people sent me questions that were very much focused on the Eurozone. Should there be a two-track Eurozone? Should one end entrance into the Eurozone at some point, etc.? So I'm sure that Bank of Latvia has ample opportunity to organize more events of this nature where we can perhaps also be drivers of Euro issues in Europe going forward. And I would like to paraphrase our finance minister's quote by the famous and illustrious poet Jānis Rainis, pastāvēs, kas pārvērtīsies. I would translate it as he who changes survives. And our panel today was witness to the way Euro has changed from its inception in the past and identifies that change will be needed to be a strong currency in a very strong, large zone and economy going forward. So thank you very much for your attention. But the session isn't closed yet, as the very final word goes back to the Bank of Latvia. Lūdzu.
Thank you very much. It seems that one word also was quite often used here: sustainability, lasting, and future. But ladies and gentlemen, here we conclude today's conference, and we really sincerely thank our speakers, first panel, second panel, because they made this discussion so valuable and interesting. And also I would like to remind you that on behalf of the governor of the Bank of Latvia, we invite all participants to take part in the reception, which takes place in the Minister Hall, in the first floor. And hopefully you have something to discuss even further. Thank you very much.